results. Revenue at 3.17 billion euros, up 4.2% year over year.
Reporting third quarter sales up 4.8%. Franklin Golf Romeo.
And Fed policy will be driven by the pace of the data. Same policy will remain accommodative.
Futures off the session's low, still down about 1% on the day for a little more than 4 pennies.
Welcome back, traders and investors. We have Mike Bellafiore on the line. He is co-founder of SMB Capital. Mike, how you doing in these volatile markets?
Good. It's actually really interesting to see the volatility pick up. For active traders, that's a really good sign. For investors, I understand that makes them a little bit nervous.
Yeah, same thing with me. I mean, these straight up markets, that just inch up day and day, they just tempt me to short it at every level here. And it's just so much better when there's volatility in the market. It's just, a lot more opportunity, but there's a lot more risk as well. Tell us about your firm, S&B Capital, how long it's been around, why you started it.
We've been around since 2006. I started the firm with one of my partners, Steve Spencer. We traded for a really long period of time. We started at a prop firm, then traded our own money for almost a decade, and then wanted a new challenge. And so we started SMB. We are in the business of backing traders. We fully back traders. The firm takes all the losses. We have proprietary technology. We offer guys the ability to automate certain strategies as well. We trade options and equities and futures. We're also located in New York, which makes it easier for many.
Okay, so you probably get hundreds of applications, from young college students and people looking to change professions. What kind of specific qualities do you look for when you're choosing someone to come to your firm?
That's a great question. HR was just in my office going over a couple of maybes and asking me to clarify what we most were looking for. First thing I'm looking for, the firm is looking for, are people that have traded in the past, no matter whether it's extensively or semi-seriously. We want to see people who are passionate about the markets. People who are passionate tend to have been doing it before. The second thing is we want to see a history of success. People who have been successful in the past are going to be successful going forward. So whether that's a high-level athlete, I was a former Division I athlete, whether that's somebody who has a tremendous background in chess or gaming or music, something that shows that they were successful at something that took them a long time to become good at. And then the third thing is we're always open to just talking to people who are super bright. You see that maybe with their math background or their programming background.
Okay, so you co-authored a chapter for the StockTwits Edge in which you discussed your favorite trading setup. Could you go through your favorite trading setup for us?
Sure. So we call it the changing fundamentals trend trade. We're looking for stocks that have changing fundamentals, that there's a news catalyst behind it. So, for instance, for today, we might want to take a look at something that has missed on earnings, that's gapping down, that before today, there now is new news that the company isn't as strong. So, maybe a microchip on a day like today, maybe a Juniper, or maybe an MBLY with the announcement that their technology is not going to be in the new Tesla car that was just released. I'm looking for stocks that are gapping up 3% or gapping down 3%, that have this news catalyst, and then the market starts to open, and we pass what we call the price discovery part of the day. The first 45 minutes, stocks don't trend. They are engaged in price discovery. So that's why you see a lot of fluctuations and a lot of volatility and a lot of spikes and dips and reversions to the mean in that first 45 minutes. We want that period to end. And then after that ends, we think stocks can trade cleanly. And so if you can find something that's directional on your longer-term charts, and then intraday is also directional. It's now 10:15-ish, and it's trending intraday, and it's trending in the same direction as the longer-term charts. And all of that is matching the new fundamental catalyst that is coming into the stock. So on the downside, long-term charts are broken. Intraday charts are broken. It's past 10:15. The news that just came out, which is new, is really bad. Those are the types of situations I want to play.
So you're going with the trend on these then? You're like
Yeah.
the Mobley here, that's bad news. The stock's had a big run. So you could care less what happens in the first 45 minutes. This is bad news. You are going to go with the news here. You're going to let everyone that wants to buy it off the open and fade the move, or the shorts that have been smoked in this thing to buy it. You're going to wait for that 45 minutes of price discovery, and then you're going to leap into action. Now, that 45 minutes of price discovery, you also
Let me just step right in there.
Go ahead.
So
Interrupt me anytime.
You asked me what my favorite trade was. So my favorite trade was that. Oh, I'm going to be trading on the open as well, but I'm going to be making lesser trades. I'm not going to risk as much. So I want to trade Mobley and Tesla and Lake on the open. I mean, Lake is probably the number one stock we're watching today. It's risen from 7 to 22 on the Ebola scare to make hazmat suits that help health workers protect themselves from contracting Ebola. We're potentially looking at a rollover pre-market pattern, a gap and fail right on the open pattern, a gap opening drive, and then fail. This is the third day it's been up significantly. We're not going to play this stock on the long side today. It may squeeze for another day, but if so, then we're going to take a little bit of losses. We're not going to get big until we really see it. We really see the confirmation that the pull-in is there, maybe a big red candle on our charts or increasing volume. But I will make lesser trades, so I won't risk as much, but I will fade some things in the first 45 minutes. I will make some momentum trades in the first 45 minutes. But as an intraday trader, I might risk 10% of my intraday stop on a fade trade or a momentum trade, whereas the trade that you asked me about, I might risk 30% of my intraday stop. I wrote about this technique in my second book, The Playbook, about how you want to understand your A-plus trades. So the changing fundamentals trade is my A-plus trade, and I'm going to give that lots of risk, but I have other trades in my playbook.
Yeah, that's another excellent point that you made there, that, when trading, especially in these volatile markets where there's more movement, number one, you don't have to trade the same size to make the same kind of money. And then also what I really think that new traders and even veteran traders like myself have a problem is, hey, sometimes you need to dial it down a little bit. Let things shake out, because I'm sure the way that you're trading, even if the first 15 minutes, 20 minutes don't go your way and you're a little bit in the red, it's no big deal, because you know when your most productive time of the day is and when that price discovery. Now, I just wanted to get to your point here. You said about the 45-minute period and the price discovery. Is there any particular tacticals that you're looking at, or is it just that price when, boom, 10:15, Mobley closes? I don't even know where it's trading at now. Let's just say it closed at 51.50. That's your level, whether it trades above it. What kind of technicals do you incorporate into that price discovery?
Yeah, so that's a really good point. And I just want to take one step back, because I think we should probably talk about this a little bit. And you hit upon this as an experienced trader. You're sensing this, and maybe not everybody else is. We actually had a happy hour last night with our guys celebrating one of our guys actually getting married. And we were all talking about how different the market may be right now. I mean, you see the VIX, which has technically broken above 17 and broken above 18. And for technical traders, you should say that's a breakout. The volatility is breaking out on our charts. Next level might not be till 21. For the intraday traders, you might express that idea with VXX. If you get really ambitious, you might express it with a 2 times ETF, UVXY. But these markets, we were in that new normal of anemic volatility, right? People were complaining that the markets weren't moving. But we may now be entering based upon the QE ending. There's your fundamental catalyst. With QE ending, there's less money to be pumped into the marketplace. And you mentioned you've been shorting recently and getting run over sometimes. Well, now you do have a fundamental thesis that you can bank on. Plus, not only do you have a fundamental thesis, but we're starting to see some signs of nervousness. When the VIX generally moves in the opposite direction of the market, and as it goes up, markets go down. And generally, when volatility rises, that's signaling the market's nervous and ready to trade lower. So we may be entering this period where we're going to have to trade differently. And how do we do that? We'll trade ETFs more. We'll trade a much smaller time frame. We will take our profits much faster. We'll expect more, what we say are move-to-move trades. We won't look for trend trades as much. We'll sort of hit and go, hit and go, hit and go, hit and go. And that may be how, look, we need a couple more days of confirmation, but that may be how we have to start attacking the marketplace, the Momo trading, the scalping, which is a bad word for some people, but that might have to be the way we attack the market. And look, we're prepared for that. Again, we need a couple more days to see if this is really playing out. And just if we look at our market levels overall, I mean, we've done this before, right? We've had 3 similar down moves like this already this year. We had our down move from July to August, we went down about 3.9%. In April, we went down about 4%. At the very, very beginning of the year, from January to February, we went down about 5.8%. And we pulled into that 200-day moving average on our S&P, and we bounced each time. And so we've got high volatility, which is a sign of nervousness. We've got this fundamental catalyst of QE ending, but we're not broken yet technically. We need to get below our August lows of about 1909, and we need to get below our 200-day moving average of about 1905. So we're close, and there are signals that we could be entering a little bit of a sell-off, but not yet.
Okay. Hey, Mike, thanks a lot for coming on. I know we're keeping you a few minutes to open here, so we'll let you get back to the screens. But I think that the most important point that you mentioned here is that you're looking for a catalyst. And a catalyst, a lot of times that you're looking for, at least on your favorite trade, is something from the fundamentals. And I think that short-term traders and day traders, sometimes tend to get away from that. And they're so price. I mean, price don't lie, but price is infected by the fundamentals. And really great points here. I have read your book, One Good Trade.
Thanks.
Yep, I appreciate you coming on. I'm going to bring it in here for people on the desk to take a look at it. Thanks a lot. We'll be keeping an eye on Mobley at 10:15, and I'll be tracking that one. Thanks a lot, Mike.
All right.
Have a good trading
All right,
day.
great. Thanks, Joel. Thanks a lot.
All right.